10 days ago, we came in and thought the markets were in some exaggeration and that we should be entering an intermediate correction. We believe that it has started to materialize and that it possibly has another a week or a couple of weeks to go. We will look at it today in more detail. Now first, we go onto our FinGraphs platform and we wanted to introduce a new functionality. If you look, this is the Dukascopy FX directory on our fingraphs.com platform, and we could see that we now have filters which automatically update to show the most recent trend analysis. And it updates every 20 seconds. So you could have an update on the very short-term time frame, so the super scalper, so the 60 seconds, 15 seconds, 5 seconds, and then a more regular, longer-term update on, for example, the investor's view, which is a weekly, daily, and hourly chart. So this is available on our platform. Please don't hesitate to come and fetch our 7 days demo, fingraphs.com. Now, looking at the chart, we will first start with the S&P 500. It is still heading up at the moment. It is still in an uptrend over the next few quarters. We could see some signs of exhaustions. Our envelopes are touching each other. Our impulsive targets have been reached. But the risk index is not yet overbought. And we believe that there's possibly another 1 to 2 quarters to go before the S&P eventually starts to top out. Now, if we look at the daily chart or the perspective over the next few weeks, we also see some exaggerations here with our envelopes touching each other and our risk index, which is slowly getting into overbought. Our impulsive 2 targets has still not been reached, but bear in mind, these are impulsive 2 targets, they're very extended. So we believe that this justifies some sort of intermediate correction. This is what we may be starting to see on the hourly chart. The hourly chart has also reached its target. We saw that there was market stress here and that the smaller envelope has started to turn and that the risk index was overbought and is consolidating down. We believe that there's possibly here a week to a week and a half to go to the downside. Now looking at the targets, in first instance, we'll probably target the lower end of our envelopes around 25.60. And then if we scope out and look at the daily again, we could probably envisage 2450 as a worst case scenario. But we think this is possibly going to be a mild consolidation given the 3 bulls we still have here on the charts. And so we would probably target the hourly 2560 as our possible targets. Now looking at Europe, we have a similar picture. The Euro Stoxx 50 future is still heading up, possibly until early next year. We don't see an exaggeration here on our envelopes nor on our risk index, and there's possibly up to another more than 10%, possibly even 15% of upside over the next 1 to 2 quarters. Now, if we look at the daily chart, we had reached our targets. We were at stress on our envelopes. We didn't quite go into overbought on our risk index, but it's rolling over, and we believe we're in an intermediate correction. In worst cases, it could reach back down into the September levels, but we believe this is possibly much too aggressive. So our view is that we'll probably follow this downtrend down on the hourly chart or the perspective over the next few weeks. And this would lead us down another week to a week and a half into the lower 3500s, which is about 1.5 to 2% below today's levels. Indeed, if you see here, we can't be too aggressive because the risk index is already getting oversold. It hasn't reversed up yet, but it's probably a matter of a week or so before it starts to do so. So if we look at all 3 charts, we're still on an uptrend on the weekly with quite a bit of potential in Europe. We have probably made an intermediate top and we are seeing its correction at the moment. And this correction possibly has another week to a week and a half to go before they could probably be a buy the dips opportunity. Now, if we look at currencies and we'll look at it on the investor's view, we can see that the weekly chart over the perspective over the next few quarters is relatively supporting with a low risk index, not quite oversold, but which seems to be turning up. Our targets are still quite aggressive to the upside and we still have a bullish signal. So we'll be positive over the next few quarters on dollar yen. On the daily, we've reached the upper end of our corrective targets up and are bumping against this resistance around 114. So we are seeing a slight consolidation, which could probably last another couple of weeks, but we would expect it to break above these levels over the next few months and possibly lead us into the higher end of our envelopes into the 118 levels in first instance. The hourly has been correcting down and probably has another week or so to go, and the targets to the downside are into the 112.60 or 60 to 80 pips below where we are today. Now we'll quickly look at the euro. The euro had a strong rally since the beginning of this year or late last year. It is still a corrective move. It hasn't made it above our corrective targets, and this corrective move is taking a pause. And this pause can be seen on our daily chart, where we've been correcting down since September, and that we possibly have another month, a month and a half to go, and the targets of this correction down are probably towards the 113, and we believe into mid-December possibly. The hourly in this downtrend, or in this correction, is seeing a bounce at the moment. The bounce could lead us up another week or so, and possibly into the 117.50 area during that period, before it then resumes down in accordance with the daily. Now finally, we look at gold, which is the ultimate defensive asset. We can see that gold is still in an uptrend over the long term. That said, we believe it is in for a temporary correction phase. You can see that our envelopes are touching each other, and our risks index has just reversed down. We think it's temporary, but it could lead us into a correction which could last another few months. If we look at the daily, it topped out early September, as with the euro. It is in this correction down, possibly until December, and it could probably lead us down into the 1250, 1240 level before it starts to find support. Now, shorter term in this move down, we are seeing a bounce at the moment. The bounce probably has a bit more to go and could lead us up into the high 1200s, possibly into the lower 1300s before it reverses down again. So the correction down is happening. We don't think it's going to last that long, possibly another week or so, and then you might have a buy the dips opportunity. Thank you very much and have a good week.